Well, good afternoon, traders, and having a quick look across the Asian boards today to set us up for the European Open, just see what's going on. Let's immediately go to what's happening on the equity indices front, because there's a sea of red at the moment, apart from what we're seeing in Australia. The Australian, the ASX 200, they're up 31 points. Now, we were expecting a really strong gain given what we saw from Wall Street, where the S&P closed up 1.4%. So the fact that we're up 31 points shouldn't necessarily surprise anyone. Consider as well that volumes are very, very light today, 60% below the average for this time of day. Now, there's a holiday coming through in New South Wales, so a lot of participation out of the market. People have taken a long holiday, but we've got all sectors higher. But I think that's really where you're seeing the positivity flow, because it's really quite contained, and it's very aimed just at the Australian equity market here. Because if you have a look at what's happening in Asian markets more broadly, a lot of these markets are closed. So I wouldn't read too much, and these are our opening calls were they to open now. We've had China closed and we've had Hang Seng closed, but those markets are pointing down 149 and 64 points respectively. Japan's down a touch as well. Have a look at our markets, our opening calls for Germany 30. You can see it down 6 points. So a little bit of selling playing through, but it's nothing too sinister. In terms of the UK, down 16 points, but it's the Wall Street cash which is coming down 115 points, and you're seeing a bit of an offered tone coming through in the S&P as well. S&P futures down 0.5%, Nasdaq futures down 60 basis points at the moment. So that's really where we're selling it. If you can see, there is a little bit of risk aversion kicking into the commodity markets. Crude down 18. And you got gold in US dollar terms up there $3 or so, just holding that 1500 handle quite nicely. You can go into the FX markets. Euro dollar's not doing too much, but there's certainly an outperformance today coming through in the yen and also the Swiss franc. Now, if you marry that with what's weak, you can see a bit of weakness creeping into the Antipodean currencies, the New Zealand dollar, the Australian dollar, and also if you go slightly more outside of G10, you can see some selling playing through in the Sing. And I think that's quite interesting playing through there as well. Cable, well, that opened near the lows, 123.10, around those kind of levels, and we've seen a little bit of buying coming through there. And it's interesting to look at the volatility markets. If you have a look at options market, you can see 1 week and 1 month implied volatility, and cable is very much unchanged, and that's despite a lot of the headlines that we've been seeing from Boris Johnson still threatening to take the UK out of the EU by the 31st, and the deadline for Brexit. And we've seen Emmanuel Macron, the French president, talking about having a solution or having a clearer understanding about how they're going to stand with the UK's, or Boris Johnson's proposal by the end of the week. So we're getting to a stage where fireworks can really happen. If you look at the daily chart of cable, which I put in my chart of the day, you can see that we've had 2 inside days. So the market is just looking to push either side of that bar that we saw a couple of days ago. If it breaks either of those levels, we could see an explosion in explosion in price action from there. Definitely something to watch. But I think Brexit is starting to get to a really interesting point. So if we're starting to trade the pound, if you're trading it for the first time in a while, do be aware that we could see some high volatility. That has to be a dominant consideration for your position sizing and your risk management more broadly. Have a look at Aussie. Have a look at what's happening in dollar CNH. You can see that's up 220 or 22 pips at the moment. That is going to be, for me, the epicenter of the world this week. Really what we're talking about is on the 10th and 11th, we're seeing these high-level talks between the Chinese and Americans. There had been some talk on the wires that came through Bloomberg this morning that has caused this move higher up in dollar CNH. They're talking about senior Chinese officials saying the range of topics that they're willing to discuss at these high-level talks have narrowed considerably. They're shying away from talking about things like industrial relations and also government subsidies. And that's caused this slight risk-off feel that we've been seeing through Asia. The market's a bit worried that we're not going to see convergence between these two, that we're not going to see a trade deal. I think there's a very, very low probability. I wouldn't even get your hopes up about that. And the way that Peter Navarro was talking last week about refraining from a small deal suggests that any kind of deal is going to be very hard to reach, or even real meat on the bone. What we can hope for, at best, I think, is the idea that on the 15th of October, these tariffs on 250 billion of US imports of Chinese exports are going to go up, and what we could see is that number being delayed, that tranche of aid, that tranche of tax being pushed back a little bit, and that could cause some moves in dollar CNH. So the market could get a bit excited on the idea that those tariffs could get pushed back, but if they don't, then of course you may see some good buying coming through in dollar CNH, and of course that could bring down things like Aussie dollar as well. That's going to be the epicenter of the world. Of course, we do get a number of Fed speakers, and I'll certainly be looking this week at Jerome Powell, who will be speaking a couple of times. What will he say about rates? What will he say about the balance sheet? What does he need for excess liquidity to be put back into the market again? What sort of size balance sheet will be they targeting going forward? Plenty to watch out for, but certainly on the start of the week, we've seen a slightly offered market.